Hi, I'm Marco Schwartz here, and in this video I will be telling you about investing in ETFs. We are going to see why it's a good idea, why it's not a good idea, and especially we'll talk about ETFs in the light of investing in dividend growth stocks, which is something I taught a lot on my website and on this channel. It's my favorite way to invest on the stock market, so we are especially talking about ETFs, as I said, with in mind how does it compare to investing in individual dividend growth stocks. So first we're going to see what are ETFs, then we'll see what are the advantages and the drawbacks of investing in ETFs, and at the end we'll actually going to compare one dividend growth stocks to an ETF in the dividend growth space as well, and we'll see in terms of numbers how does it compare. So first, what are ETFs? So ETFs stand for exchange traded funds, basically funds that are accessible on the stock market just as other stocks. So you can easily buy them, sell them on the stock market just as it was a stock from an individual company, and it's just as easy. So of course ETFs, just as funds, are composed of many individual stocks that you can access instantly by buying an ETF. So I remember when I started to invest 10 years ago, there was a different section on the stockbroker where I was buying for stocks and another one for funds. And for funds, you actually had to pay quite a lot of money to buy into them. And then also you had some management to pay every year, which were not insignificant, like 1-2%, and also it was not so easy to sell them. So ETF solve all of that because they are fully automated. It means that you don't have all those fees, and also you can easily, as I said before, buy and sell them on the stock market. So now let's see what would be first the advantage of picking stocks one by one compared to investing in an ETF. And then we'll see on which points ETFs are actually better. The first, we talked about those fees. So ETFs still have fees that you need to pay in order to use them. So basically it's some management fees that are paid every year, but they are very small. So for most ETFs, especially in the dividend growth space that I look at, they are less than 0.1%. So if we take the one that I will talk about at the end of the video, you will have to pay around 80 euros or dollars per year for a portfolio of 100,000 euros or dollars. So it's very small. If you compare it to investing in stocks one by one, where you don't have any fees to keep them on your account, this is definitely a drawback, but also not a big deal as it's very small. The second point I wanted to raise here is that when you pick stocks one by one, you can actually make sure that you have this very nice dividend growth curve that is so important in dividend growth investing. So let's say we compare the dividend evolution of a very well-known dividend growth stocks like Johnson & Johnson. If we look at the curve right now, you have this very typical growth of the dividends, meaning that the company really has a very strict policy of raising their dividends, and that's very good in terms of the growth of dividend you will get. Whereas if we look at the typical dividend growth ETF, well, it doesn't look that nice. Of course, the dividend will rise a bit over the years, but not that much, and you don't have this nice organized growth that you can get when you pick stocks one by one. So why is that? Well, if we look at the ETF itself, so this one is from iShares, it's called a dividend growth ETF, and that's the one we'll use for the comparison at the end of the video. And we can see that there are well-known dividend growth companies that I talk about all the time, like Microsoft, for example, but there are also a lot more companies. There are more than 40 pages of companies inside this ETF. Meaning that, well, some will not have this nice growth curve of the dividend that we saw before, and therefore you will get this quite ugly, non-regular curve of growth of the dividend over the years, and that's not the best for a dividend growth investor. So that's definitely one drawback of ETFs. Now, third point I wanted to make here, you will notice that the current yields of dividend ETFs are quite low, usually around 2-3%. And it's very easy to pick dividend growth stocks that have current yields of at least 4%. That's because there are all the stocks inside those ETFs and that you can pick the one that have a good yield at the moment. And therefore, that's also one drawback of ETF. The initial yields are usually quite low. Now let's talk about advantages of ETFs over picking stocks one by one. The first one is, of course, that you don't have to worry about anything. You don't need to learn about dividend growth stocks, about the numbers. You can just monitor one or two ETFs in your account, and that's it. Of course, I would argue here that it's not that difficult to actually learn about it. It's actually very exciting. That's what I do on my channel and on my site. And it's also not that hard today to manage over 50 individual stocks like I have on my own account using, it's very easy now with apps and everything to buy, sell stocks and manage, know exactly what you have. So therefore, that's definitely a good point for ETFs, but also not that difficult to manage if you want to pick stocks one by one. Second thing is, of course, the instant diversification. So when you buy an ETF, you instantly invest in sometimes 1,000 different stocks, which would be impossible, nearly impossible to do by hand. So that could be an advantage because you instantly diversify. However, I would also argue that it's not always an advantage because I really prefer to know what I'm doing, to pick my own stocks, know why I actually put them in there, rather than just giving all of this away for someone else to do. That's me. That depends on the level of control you want on your portfolio. So for some of you, it will be a very good thing. For some of you, like me, it won't be. So that's up to you to choose. So now let's talk about numbers. What if we just invested in, let's say, 2014, 100,000 euros, dollars, whatever you want, in Johnson & Johnson on one side, so a very good dividend growth stock, and in the iShares Dividend Grow ETF, which has a symbol DGROW, like for dividend growth. And let's compare what we get at the end. I will compare them in terms of capital invested and capital that you have at the end. I will compare them in terms of dividend received and also on what's very important in dividend growth investing, called the yield on cost. Basically, the yield or returns you have at the moment, but compared to the money that you initially invested. That really tells you what is your yield at the moment, and is very important to see if the dividend actually has grown over the year. So I have the numbers right here. So for the ETF, we have a capital at the end of this period, so from 2014 to now, we have now a capital of 196,000, so definitely nearly doubled compared to what we had. We received 26,000 of dividends, and also we have a yield on cost of 3%. So you can see that the yield is a bit just above the yield that you can get right now if you actually bought this ETF, but not that much. So there was not a great growth of the dividend. With Johnson & Johnson, you will get a capital a bit lower at 171,000. You will get 32,000 of dividends received over the years. So it's a bit the same at the end in terms of the money that will actually be on your account, if you didn't reinvest it, of course. But the yield on cost would be about 5%. So that's much higher than what you will get with the ETF. It means that because of this very regular curve of growing dividends, you get a much better growth of the dividends, of the yields over the years, and therefore your current yield on the money invested, it's much higher than compared to the ETF. So that's, for me, also a very important point here, that the growth of the dividends will be, in general, much better when you pick stocks one by one than compared to investing in an ETF. So that was the advantages, drawbacks of ETFs compared to picking stocks one by one. As you can tell, probably I'm more in favor of investing in stocks one by one because I'm a control freak, because I love to learn about all of that and I really want to have control over my portfolio. But definitely ETFs are not a bad choice at all. even in the field of dividend growth investing, especially if you just want to have a simple account with 1 or 2 lines in there, just 2 good ETF and you're set. Definitely also a great way to invest. So if you want to learn more, I just put below the video a link to my free guide on my site to learn more about investing in dividend growth stocks and investing in general. So you can just grab that with the link below the video. That being said, if you have any questions, just leave them below the video, and I thank you again for watching the video, and I will see you in the next one.